Hi, I'm Greg Abel. I'm the broker owner of Avenue Real Estate Group. So we get asked a lot lately from clients and other people calling in, should we be selling, buying, or holding real estate investments currently? And the answer to that question is complicated, but we did post some graphs on our website, and I wanted to cover with you real quick. The real answer depends on what your goal is, obviously, and what you're going to do with the equity that you pull out of the house. So, we look at really four questions when we talk about the market. Will real estate prices continue to rise? Will rental prices rise or fall? And will we see inflation in the U.S.? And then the last question that I always kind of bring up is, why are large investors, hedge funds, corporations, just these big conglomerates buying up property? If we list a house today, we'll see homeowners make offers, but we're also seeing iBuyers. Zillow has iBuyers. There's all kinds of different automated corporate buyers out there gobbling up real estate at these record high prices. And so we have to assume that they know something that we don't, or they have a tolerance for risk that we don't, right? So it really depends on what your goal is for your investment and the property. Here's one thing I do want to point out. So a lot of people say, is this a bubble and what will happen? And when you look back in the bubble of like 2005 to 2008, when we ran into what they called stated income loans, there was sort of an artificial demand because they had opened up loans to stated income, also known as liar loans, because people were just getting money and cash back and buying houses. And that was like right in here. So here's what the bubble looked like, right? So it was going up slightly, and then the crash hit. Inventory. This is inventory. Homes available for sale. And then we had the crash where nobody could sell a house, and inventory stayed up to 4 million mark nationally, right? So then we get down to the past, 10 years, and we see a normal market. Inventory's kind of going down, and then this is where we are today, which is 1 million homes in the U.S. for sale versus 4 million in the peak. So we're at 25% inventory nationally. So this is a true supply-demand issue. Rising prices are from supply and demand. The amount of supply that we would need to even put a dent in this demand is so astronomical that it's not going to be a bubble that pops. We're going to see prices at least top out and maybe see appreciation. But everybody's already recommending or forecasting appreciation of 10 to 15%, depending on what market you're looking at. Now, this is the actual St. Louis market over the last 10 years, from January 2011 to January 2021, and you see the same thing. Here's the amount of homes that were sold. Here's the inventory available for sale, and this is almost no inventory available, and that is creating the prices. Now, if you look at the number of inventory that we had here, let's say 2,000, to get to a normal market of 6,000, we need 4,000, more homes. So we don't just need a few more homes for demand. We need a lot. So we don't expect prices to plummet or change. We actually expect them to keep going up and then level off and stay high. So rental prices, we're seeing the same thing. In the St. Louis market, rental prices are going up and up and up, probably faster than home prices. And you'll hear on the news like that rents are falling, but that's New York and big cities, Chicago, people fleeing cities. This is St. Louis, St. Charles County. This is something different. Single family home prices are going up dramatically. So if you have a real estate investment, it's appreciating and the rental price is going up. And, the question is, if you sell it, what would you do with the money? So here's a Fox 2 News report. Rent prices up 22% from last year. So if you sell your investment and you have the cash, what will you do with it? If you're just going to pay down debt and we see inflation, that's not a great strategy. And if you just keep it in cash, that's not a great strategy. If you put it in the stock market, that might be a decent strategy. But what people don't realize is if you sell a $400,000 house that's appreciating at 10 to 15% per year, and you pull out $100,000 of equity and you put it in a mutual fund that gets you 5 to 10% a year, so the difference is 400 at 10 to 15% or 100 at 5 to 10%. Now, I'm not a financial advisor, so I don't know that I can give financial advice, but I think this is why we're seeing these big corporations and big iBuyers buying up real estate and holding it as investment properties. And so, these pension funds, corporations, hedge funds, we just see a ton of them just gobbling up real estate, which I think is also bringing up the price. So, I guess in short, my advice is buy and hold investments to keep the benefit. With rising rents, tax advantages of depreciating the property, your rapid appreciation in the next couple of years, the ability to borrow and leverage against the property, and it's really just a nice shield against inflation. So, right now we're recommending that people hold, but we do have people that are selling and we do have investors that are buying. So, what we're asking today of our clients is let us know. If you have the intention to sell when a lease is up, let's see if we can't match you with a buyer that might buy it with a tenant in it. A lot of these investors are buying the property. They're going to hold them and put the tenant back in anyway. So it might be an advantage just to have the tenant in there. So with that being said, we'll shoot you an email or contact us and let us know which area you want to go or which direction you want to go. And we'll be happy to help from there. Thanks so much.